Hey, everybody, welcome to another weekly Future of Wealth update with Lance Ippolito. Lance, how are you doing today?
Fantastic. How are you, James?
I am rocking the free world. Thank you for asking. The coronavirus has got me a little bit excited because apparently I'm immune, and also there's just so much money to be made in this market.
I like that. I like that a lot.
Yeah. So where are you seeing opportunity this week, Lance?
Well, we had going back last week and actually the start of this week, a little squeeze higher. There's opportunity though, and there's do's and there's do nots. Let's be clear in this market. Where there's opportunity in the do's, internet software names in the tech sector, those names have held up very, very well. And actually, and I can't believe I'm saying this, the China stocks are holding up very, very well. So when we look at some of these tech names like Amazon, just hit a new 52-week high. The stock's up about 10% this week alone. And if we look at some of these China stocks like your Alibaba, your JD.com, JD.com, new 52-week high today. Another tech name, online e-commerce name over there in China. So there is some opportunity, there's some do's, and then there's do nots, places that you want to avoid that are just seeing absolutely outflows of capital. And that's financials. We're starting to see banks report earnings this week, and energy. But going back to the banks, because energy's been weak for some time, nothing really there. I know we've had the up and down OPEC and deal, all that we could talk for hours about. But specifically the financials this week, Wells Fargo came out, not a pretty quarter. JP Morgan came out with Jamie Dimon basically saying we're going into recession. Michael Corbat with Citigroup today. The numbers weren't bad on EPS and revenue, but just the outlook. Bank of America, horrible outlook. I don't like the banks at all. If the banks go down, this market's going down. Tech can only save us for so long, in my opinion.
Mm-hmm. So is the performance in the e-commerce subset of tech companies, is that a direct reflection of the increased volume of deliveries as a result of people working from home in the coronavirus universe?
I would say so. The one thing that's a little shocking to me is it took this long for these names to move. And I mean, really just over the past couple of weeks, it's kind of like the market woke up and said, well, we have to put money somewhere. Let's go to these e-commerce names. At first it was, your Walmarts, your Targets, your Costco held up, but now they're just saying, all right, well, this is the new normal, quite possibly. So we had to put money to work somewhere. Let's go to this sector.
Mm-hmm. All right. So then sectors that are bleeding, obviously banks are falling prey to the massive amount of mortgage deferrals.
Yep.
And rent deferrals, which are causing commercial landlords to defer mortgage payments, which is causing non-performance of mortgage-related securitized asset funds and their portfolios. So the question is, for me, is trillions of dollars of central bank stimulus globally going to be sufficient to offset the underlying fundamental economic weakness in the banking sector as a result of defaults, deferrals, and what would certainly turn into repossessions of property in a normal universe? Or is the economic damage that is accumulating in the global economy going to way overwhelm any amount of quantitative easing that can be rolled out by central banks?
I think the central banks have done so much so quickly that you can only prop up this market. You can only have so much smoke. Eventually, that smoke's going to clear. And we saw this years ago, especially with European banks from their your Deutsche Banks, your Barclays with their those European banks have been dark clouds for years. But you're really starting to see, in my opinion, when we look at overseas, Europe specifically, that's where these banks are. I just can't see how they make it out of this without some drastic measures. When I start seeing J.P. Morgan and Citigroup and Bank of America, our U.S. based banks start to really warn of recession fears, and they're coming out against the Fed saying, the Fed has done so much where they don't even know what the projection is. Morgan Stanley's trying to call the second wave of coronavirus and predicting the next 12 months. This to me is very scary, because what I think the banks are going to do is say, look, there's so much bad economic news globally that we have to take care of ourselves. They're selfish. Let's be honest here. And no matter what the Fed, no matter what anyone tells us to do, we're going to cover our butts. If that means not, giving loans out to people, whatever it may be, I think the banks are going to put themselves first. And I think the Fed, everything they've done to really bounce this equity market higher, I just can't see it. Eventually, the debts are going to have to be addressed. And it might be 2 months from now, it might be 6 months from now, it might be 12 months from now, but eventually I think that the central banks are going to just lose control. I would say they've already lost control. I think the central banks are going to be like, okay, we need to readjust everything and go from there. Because right now it's just, it's crazy right now. It really is at a point of time. And the market had a fantastic bounce, but I think we're going to start seeing smart money fade this bounce and really think of, all right, well, what's next? You did a little bit you did a lot in the short term, but long-term economic slowdown, how do we address that?
Sure. The one of the byproducts of massive quantitative easing globally from 2008 was the surge in stock market prices as companies accessed the abundant and cheap capital to invest in share buybacks, because that was a more direct way to monetize the shares that they owned, management owned in the one hand. B, it was an easier path to create an optical share price appreciation for their shareholders by, diminishing the dilution of the company. Is stimulus going to result in another accelerated round of share buybacks as this smoke clears?
So you bring up a very valid point, and one that's starting to hit, the news tape again is buybacks. Companies have been buying back stock really over the past 10 years or so. It's financial manipulation 101. There's no denying that. I know the airliners, I believe 10 came out this morning with agreements via loan and federal funding. And I believe on some of them, they cannot buy back their stock till 2021. So give it a year, right? That's still, when companies are buying back stock, they're basically propping up their share price, and they're doing that year over year. We're seeing that. Now the result is, hey, the airliners specifically are asking for, money. To me, this is just another black eye to the market and to these public companies. And I don't see how this, all right, we never buy back stock again. It just ends. I think 2 years from now, companies will do the exact same thing. And when they run out of capital, or when, another economic downturn hits, they're going to look for a handout. If you start doing handouts and too big to fail, every company's too big to fail now, it feels like. And that's very sad. That's not capitalism.
Right. It's a situation where government socializes the losses of large corporations and privatizes the wins. And that, you're right. That's not capitalism. That's not democracy. That's oligarchism
Yep.
and hegemony at its finest. Though, even this idea that, well, airlines are going to get billions of dollars in bailout dollars, but they can't buy back their stock for 1 year. Well, what is 1 year? That's 12 months. That's 4 quarters. That is meaningless. The rule should be you're not allowed to use taxpayer dollars to buy back your stock ever. In fact, you're only allowed to buy back your stock in a year where you deliver a dividend to your investors and your employees have gotten a raise and you yourself have not exercised any options. That's when you should be able to do a buyback, because otherwise it's basically institutionalized predatory behavior against investors and employees.
It really is. And there's so much talk on these companies that, oh, well, we need this handout. You have to keep us afloat. We have employees. Your pension funds depend on us. Come on. This is just, they're coming out saying you can't buy back stock for a year. You can't lay off employees. Well, guess what? They've already laid off employees. They'll reduce their hours. They'll reduce their pay. Don't give me that the pension funds are going to suffer. These pension funds, they're not all in at American Airlines or Delta. If anything, there's such a small weight of their portfolio, and these CEOs are still going to make their tens of millions in bonuses a year. It's a cycle, and it's just repeating itself all over again.
Yeah, well, it's. And just wait until the lobbyists challenge the clause where they're not allowed to buy back their stock for a year, and that quietly gets canceled as well.
Yep.
Okay, so then, we live in a universe where we can't believe what financial mainstream media tells us, because they're essentially in collusion with government and banking to distribute a message of, a message of everything, all is well, everything's fine, go about your business as best you can. We're in a crisis and the banks and the system will save you. And this is all well and good. Yet we know that what is actually happening is that the top layer of the financial system has subordinated government, so that government serves the top 0.1% of the financial system first and foremost, serves the next 1% secondarily, and the run-of-the-mill citizen is an afterthought and is really just the victim and the prime target of all of this policy, as the financial sector continues to use the market as a wealth transfer mechanism to relieve individuals of whatever wealth they may have and accumulate it into their large multi-generational capital pools. So then, with that in mind, it really takes a switch in psychology. You have to adopt the position that the government is my enemy, the mainstream media is my enemy, and I have to act accordingly. I have to deploy capital with the understanding that the government and the banking system, with the help of the mainstream media, is targeting my wealth and my home and my job, because they want everything, and they're not happy as long as I have anything. So with that in mind, where can we make money? In the wealth press universe, I know we've adopted that mindset by default, and we do our best to educate our readership that is the mindset required. But specifically, where are the areas where we can really sort of, in a guerrilla warfare mode, rush in, make money, and rush out, take our value at risk off the table, and keep it safe until the next opportunity? What are some of the sectors where those opportunities are really extant?
Yeah, you make a fantastic point. And one thing I'll also say about the financial media, I want everyone to go back and look 3 months, 5 months, heck, go back in time years. When's the last time somebody told you to sell a stock or to close out a position? I remember, because I have friends who are on the financial media going up there. They're talking about these companies. Yeah, I'm long this stock, this stock, this stock. And now those stocks are down 50% in a matter of, a couple months or so. And then they go back and say, well, those those were just picks. Those were just trades. They weren't long-term holdings. Well, guess what? The people sitting at home, they have their retirement accounts. They have their life savings in those holdings, and now they've declined 40, 50%. So you can't trust what the financial media is telling you. Too many people get burned, and their motive is to buy because they have endless amount of capital. These people on the television, they're managing money, right? The more money they have under management, the bigger their paychecks are. So they don't care if they buy, Google, Apple at 200 or 300. They're going to continuously buy forever. While chances are you only have a certain amount of capital that you can buy. So when I'm looking here, because I'm a trader and I want to make money, that is my goal. I don't get married to any positions. I want to make money right now on stocks. What I've been looking at is some of these China fraud names, and I'm going to use that word fraud as factual, like your Lumpkin Coffee that just came out and got delisted, like your IQ, the Netflix of China, quote unquote, HTHT, China Lodging Group. These companies have gotten caught just in the past couple weeks with bad accounting, with fake sales numbers, and they've been doing this for years. VIPS, another one. So what I've been doing is looking for these propped up bad players, these China ADRs, and I'm looking at put options on them because I think we're going to continue to see fraud, accounting scandals out of these China names, and they're going to take a hit. I mean, Lumpkin Coffee went from $40 to about $5. Then it got delisted the other week. You're seeing this time and time again. I'm looking at put buying, even a lot of international markets like Australia is another one. I actually just bought puts in the ETF today, the EWA. So, I'm not shorting stock, but I'm using the options market that if these sectors, if these stocks go lower, I'm going to profit from them. And with the rally we've had off the lows, the short term, I mean, global markets have rallied off the lows. I feel like right now is a fantastic opportunity to start initiating some put positions in these relatively weak sectors and names.
Yeah, well, okay. So puts are obviously a low cost, low exposure way to play the downside. What about the upside?
For the upside, and I've been a big fan of the video game stocks. I've done videos on them over the past couple of weeks. I think we've talked about them. I still like them. Not only people think video games, kids are staying at home. You have to figure the video game sector, males between, not just 18 to 24. When you look at the demographic of people playing video games, it's teenagers, it's kids, it's male adults, it's females. I even have some friends who are in their 60s who play some of these video games. I really like this sector because, too, you download the video games online through your PC, your PlayStation, your Xbox. You don't have to go to the store. That's why GameStop's a $4 stock. Everything you do on the video games, it's online, right? So more people, whether you're out of work or you're working from home, they're playing, they're spending money. The three names I like, actually I'll give you four: Activision Blizzard, Take-Two Interactive, Electronic Arts, and then Zynga. Actually, Zynga, everyone's probably played an app on their phone. Zynga makes apps for the games. So there you go.
Fantastic. All right, Lance, let's leave it there for now. It's a great update as usual.
Thank you.
We'll see you all soon. Thanks for joining us today.